Hello and welcome to this special broadcast. I am Reema Tendulkar. US President Trump has imposed a $100,000 fee on H1B visas, which are used primarily by Indian workers in the tech and IT sector. The move has sent shockwaves across the industry as a significant escalation in cost effectively could make these visas economically unviable. Currently, H1B visas cost anywhere between $1,700 going up to $4,500. President Trump signed the executive order in the presence of Commerce Secretary Howard Lutnick, who put it bluntly. He said, and I quote, "Train Americans, stop bringing people to take our jobs. All big companies are on board," end of quote. Indians are overwhelming beneficiaries of the H1B visas. More than 71% of the visas were granted to Indian nationals. China ranks second, which is 12%. Amongst companies, Amazon has more than 10,000 employees on H1B visa, according to the US government data. TCS is second with 5,500 visa holders, followed by Microsoft, Meta, and Apple. This is as per data of June 2025. The American Depository Receipts, or ADR as we call it, of Infosys and Wipro tumbled in trade after Trump's proclamation. The relationship between India and US has also soured in the last few days, with Trump imposing a punitive 50% tariff on Indian goods. Earlier this week, the US government revoked the sanctions waiver on the Chabahar port in Iran, which is being developed by India. Amidst all this, reports suggest India's Commerce Minister Piyush Goyal is set to visit the US next week to hold talks. Before we discuss with experts, here is President Trump and Commerce Secretary Howard Lutnick on H1B visa crackdown.
I think they're going to be very happy. Everyone's going to be happy. And we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that. And they're very happy about it.
So the whole idea is no more will these big tech companies or other big companies train foreign workers. They have to pay the government $100,000, then they have to pay the employee. So it's just not economic. If you're going to train somebody, you're going to train one of the recent graduates from one of the great universities across our land. Train Americans, stop bringing in people to take our jobs. That's the policy here, $100,000 a year for H1B visas, and all of the big companies are on board.
Well, this has sparked a debate. The question is, will the H1B visa program as we know it come to an end? Will higher fees actually create more jobs for American or simply reduce access to skilled talent? Will Indian IT or global tech firms accelerate offshoring to avoid H1B visas and dependency? Joining me to take forward the discussion is Vikash Jain, CFO of Hexaware. Thank you very much, Vikash, for joining in. First, if you could just tell us, what is the current proportion of your workforce on H1B visa, new hires and renewals?
So for our company, from a Hexaware perspective, close to 40% of our employee base in the US are H1 dependent. However, the key point to note here is that this number has been reducing post the pandemic. But what we cannot ignore is that a very large proportion of the employee base in the US are still H1 dependent.
And as a percent, so 40% of your American workforce is on H1B visa. And as a percentage of your overall employee base, what would the number look like?
That would be pretty less, because what we see from an overall US perspective is we have an employee base of 3,000 over an employee base of close to 33,000. So that number is not very significant when you look at it from that perspective.
Okay. Just to go ahead.
That number would be less than 5% as a percentage of the overall Hexaware.
Indeed, I was just doing the math. It's about 3.6% roughly, but less than 5% of your overall employee base is dependent on H1B visa. That exact quote of US Commerce Secretary Howard Lutnick regarding the H1B visa, saying that stop bringing people to take our jobs. And he emphasized that this $100,000 annual fee is a non-economic measure. It's aimed at protecting American employment rather than generating revenue. But the truth is, for Indian IT companies, this is economic, right? Would you be comfortable absorbing a cost of $100,000 for a single visa fee?
I don't think that's the Commerce is going to suggest is going to support that. I mean, $100,000 per visa is going to make the overall financials not stack up. I think what's going to happen from an industry perspective, everyone is trying to understand the impact of it, but my take is the companies will impose immediate travel restrictions, and it's going to be something like what we saw immediately post-pandemic, where there is going to be an immediate travel ban. Companies are going to urge US-based employees not to leave the country and advising new employees to avoid travel until there is more clarity. In the medium term, I definitely see that deal decisions may take longer to close as companies will evaluate the implications of this order, both from where to deliver from and the commercial implications. This is also going to lead to more offshoring. We saw that even during post-pandemic, more and more companies were open to the idea of getting the work delivered out of offshore locations rather than having the engineers work out of their facilities in on-site locations. Pricing could be impacted. We are in an industry where we see most of the gains on account of technological advancement. The companies share it with the with the clients. To some extent, pains are also shared between the clients and the service providers. And we saw immediately post pandemic, if you recall, when the cost of labor went up very significantly, the industry did see a increase in the pricing, and that was after a long period of time. So if this continues, we'll see that there would be pricing pressures and there would be a pricing uptick too. Alternate sources of delivery in terms of multiple geos, but I do have a bit of a concern on I think about it in terms of, do we have alternate sources of delivery which can produce the same number of engineers and technical workforce that India has? Currently, there is no one single country which can do that. So I think there is the dependency on India is still going to be there. It's going to be a mix of offshoring plus price increases plus more dependence in terms of the localites, a combination of all of those.
On an average, Vikash, what are the current H1B visa charges? And do we have clarity on whether the proposed charges are annual or will they apply to renewals?
So on the current fees, what we incur is, it varies depending upon whether it's a transfer fees or the filing cost, which can go up to $10,000 to $11,000 per visa. In case it's an amendment or an extension, it is anywhere up to $5,000 to $6,000 per visa. This one is $100,000 in addition to that. Now we are still trying to understand which are the visas or this $100,000 are applicable on what all scenarios. But to the best of our understanding until now, existing visa holders in the US who do not need to file any petitions are not impacted by this order. However, existing visa holders in the US who need to file a petition, and that petition could be for an extension, amendment, or transfer, will be affected. What remains unclear is the status of existing visa holders who are outside of the US and do not need a petition to be filed. We don't know what it means, and maybe this will become clearer once the order comes into effect on September 21st at midnight EST. But in anticipation of what's going to happen, we know a lot of the companies who are actually imposing immediate travel restrictions, urging the US-based employees not to leave the country or advising new ones to travel into the country right now.
Okay. You said 40% of your workforce, American workforce, is on H1B visa, but this number has come down. What was it 5 years back or 10 years back?
I don't have the exact number, Rima, but I'll say directionally it's been coming down.
Okay. Got that. It's been coming down. So you said the immediate impact is going to be travel restrictions like we saw during COVID, increased offshoring. There will be pricing pressure, which you will need to pass on. Net, what is the impact that you see on the company's margins or industry margins? Will there be pressure?
There'll definitely be a short-term pressure, because if this comes into effect immediately, then the companies will have to start paying on an incremental basis, while the conversations with the clients are going to take time. So there is going to be a timing gap. We don't know exactly how it is going to play it out, but those impact could be anywhere between 50 bips to 100 bips to 150 bips, depending upon each of the companies in terms of how many such visas are coming up for filing from a petition perspective. It could be very different, and it can be different depending upon how many employees do you have in the US versus what you have outside of the US. So for different companies, it could be different. But on a short-term basis, there is definitely going to be an impact because the companies will have to absorb it immediately while the conversations with the clients and that getting reflected on the P&L will take some time.
Would you completely look at stopping sending people on H1B visa? Is that a viable option or not really?
Not really. I mean, you need to continue to deliver. There are a lot of important projects which the clients want. And if it comes to those selections, I'm sure that the clients will have conversations with the service providers and agree on paying a premium and getting it done. I don't think completely stopping it is even an option.
Okay.
The clients we are even thinking about it right now.
But we can. So completely stopping sending employees on H1B visa is not an option. But perhaps we could look to bring it down further from 40%, maybe even bring it down further, be a little more selective to reduce the economic pain. Is that correct?
Yes.
Okay. But there will be a cost burden and that will need to be passed on. But in the immediate term, there will be margin pressure.
Yes.
Got that. You also spoke about, a lot of mind space is going to go into resolving this issue and figuring out how to get the job done. Do you see any sort of an impact on the current deals that you have right now? Will those get disrupted? Decision making also you spoke about getting delayed. I mean, the Indian IT companies were struggling for growth in any case, talking about an industry as a whole, not your company. But do you see the slowdown getting prolonged or the recovery getting delayed?
So this order came in only yesterday. So it's everyone is trying to absorb and trying to understand what are the implications associated with it. But at the highest level, if you think about it, even when the whole aspect with respect to trade barriers and tariff came in, we saw that the companies were taking a pause and were trying to evaluate what does these executive orders mean for each specific industry or each specific company. That's going to be the same even in this case, because the companies who have been, or the deals that we have been working on, those deals do have certain assumptions in terms of work getting done from an on-site perspective and the work getting delivered from an offshore perspective. Now, the on-site does have a dependency in terms of the resources, whether we already have somebody who's available there on site to do the work, but it might require a change in the petition because if there is an amendment associated with change in the employment or change in or it's an extension or change in location, all that is going to go through a new petition. And if this new executive order is going to be applicable on those, the deal commercials or the deal financials look very different. So obviously there is going to be a pause. People will wait to see what it means, whether there is going to be a relook at this executive order, whether this is going to be contested, whether there is going to be lobbyists who are going to be urging the president to look into it. There are multiple aspects which will open up and more clarity will emerge.
So Vikas, sorry to interrupt. Have you all made a petition? Have you all spoken to NASSCOM to protect the interests of the Indian IT industry?
Conversations are ongoing.
Conversations are ongoing right now. Got that. And just one final word, we're out of time right now, but what does this broadly mean for the Indian IT business model? We have this business model of, talent mobility, low-cost talent mobility, H1B visa dependency. Does that bring, how is the business model going to change? And tell us a little bit more about local hiring, expanding global delivery centers, etc. How will this change?
See, post the pandemic, the more and more companies have been open to the idea of getting work done from offshore locations. And then because of the geopolitical situations, whether we think about Operation Sindoor or we think about the other Russia-Ukraine war, a lot of the companies had presence in Eastern Europe. There has been a recognition of the fact that we cannot have all our talent base in one country. So we do have our on-site nearshore presence in Mexico. We do have a nearshore presence in Poland. We do have a nearshore presence in other Eastern European countries. There is always going to be a need in terms of expanding to alternate geographies, even from a geopolitical risk perspective. But what we cannot deny and ignore is no other country on the planet currently has the supply of technical workforce, what India has, and there is a demand for it. So we cannot suddenly have an alternate supply being created either from an Eastern Europe perspective or from a Latin America perspective, which we can say, hey, it's an alternate to India starting tomorrow. So it's
Right.
not like you put a tariff on Indian goods and you say, hey, instead of India, you have a China, you have a Vietnam or other countries from where you can import and they are most cost competitive. Services work in a very different fashion. So yeah, there are going to be always requirements in terms of looking at alternate means, but it's not going to be so easy. So India is going to still continue to play a dominant role.
Vikash, great conversation. Thank you so much for sharing your perspective. This is breaking news right now, and it sends shockwaves across the industry. Thank you for sharing your insights. Get into a break. We'll continue the discussion on the other side. Stay tuned. Welcome back to this special broadcast. We continue to decode the impact of the additional fee of $100,000 on H1B visas. Joining me now is Sandeep Agarwal, Fund Manager, Sovilo Investment Managers, and Bhavin Shah, Founder, CIO and CEO at Samiksha Capital. Gentlemen, thank you very much for joining in. Sandeep, if I may just start this discussion with you, this is the most dramatic shakeup of H1B visa that at least I have seen, since I started covering. But first, give us the numbers on how this impacts Indian IT. Have you done any number crunching?
Yeah, hi, good afternoon, and thanks for having me on the show. So, all the numbers are there in USCIS website, right? So you have also already reflected, and the amount has also been very clearly told by the Commerce Secretary. It is 100,000 per year. Now, I don't know whether there is some confusion in that, because H1B is for 3 years, extendable by another 3 years. And the cost, as far as I understand, and I'm tracking this industry for now 25 years, it varies from $1,700, $1,800 to it can go up to even $15, $16, sometimes $20,000. Now, this cost which they are talking about is above that. So if we take everything what is said on the face value of it, the top 5 Indian IT companies has $80 billion of revenue. And if you see the last year FY24 visas, it was 16,000. I think it would have come down to now 10,000 this year. So 10,000 visas into 100,000 is like $1 billion impact. 20% EBIT margin on an average on 80 billion is 16 billion. So 1 billion by 16 billion is 6-7% impact broadly. So that is the way it works. So quite a significant impact, to be honest. And bigger challenge is that, water and people find their ways. So I think, more and more outsourcing will happen over a period of time. And COVID has taught us everything, that how work can be done from remote. And secondly, I think a lot of GCCs will also come up. And third, I think Canada will be a biggest beneficiary, because a lot of companies will start sending people to Canada to execute. And they can, if required, go for day trip, and also they can solve. So I think there is a temporary problem. Impact is huge in an industry where growth is not there. So yes, the industry will go out of flavor for the investors for some time. But I think that except margin, execution will happen, as mentioned clearly in the previous by the previous speaker from Hexaware CFO. It is very clear there is no other source of executing this work today from anywhere else in the world.
So Sandeep, if you have to summarize very simply, it will be margin negative in the near term, but if over the medium and long term, as business models get, talent models get realigned, and we see increased outsourcing, will it be positive for margins? We reduce sending people to H1B visa, get more work done here. Won't that be margin accretive?
Yeah, 100% it will be accretive, because if you see already on the onshore, with people we send, we don't make much margins. The margins are very, very low, because we have to abide by the minimum wages and everything. So it is just that we need to give client comfort that we have to send people, and some projects are so complex that you need 1 or 2% from there to coordinate, because time zones are different. We are doing it, but given a choice, no one would like to send people. There is huge cost in sending. We make hardly any margins when we send people abroad, except few projects where you can charge very high initially during transition phase. But steady state projects, we make very low margin in the onshore. We make most of the margin from India only.
Bhavin, come in with your perspective. Have you spoken to other IT companies? What have they shared with you about the impact over the near term, medium term? And the question is, does H1B visa program for IT now become unviable?
Yeah, I think the program is definitely unviable at this kind of cost, except for very, very select, very high, talent kind of high skill kind of situations. So yeah, I think the business model will have to innovate around this, and essentially, I think as the other speaker mentioned about COVID, how it had called the way we do work, not just for the offshoring, but even in terms of interaction with companies. I have seen that the mindset of companies have changed after COVID, and most are willing to talk on a video call. That was not the case before COVID. So I think those things will happen, and I think the business model will sort of adjust to it. But I think what I think is important to keep in mind is I think we already have some factors at play with respect to the question marks about the U.S. economic growth, the impact of Gen AI to some extent, and now this. So I think it just makes the picture more cloudy in the short term, but with a clear potential for further strengthening of the offshore opportunity for India in the longer term, and maybe some other ways in which the companies will innovate to deal with this.
Bhavin, there is also a prevailing wage requirement. Can you explain what that means to our viewers and what are the implications? Are the employees who exist currently on H1B visa in the US who are unaffected as of now, will the cost associated with them go up now?
Well, I think as Mr. Jain from Hexaware, explained, in certain situations, this will require additional cost, because whether a change of site and other renewals and so on. So yeah, in that sense, it will go up, and I think that means that even those who are there, while they may not be immediately affected, some of them may be sent back, as with time.
Sandeep, just to get back to the point that you were earlier making, Indian IT companies are struggling for growth. There's very limited investor interest. Now, how do you expect, both the domestic and foreign investors to react to this change? How long will the pain last when it comes to a stock price performance?
So, Rima, it is a very structural thing. If you see before 2019, and we have seen that for last 25 years now. Before 2019, every big transition, technology, there was always a transition from one technology to another. So it used to generally create a gap for the timing till your workforce is trained in the new technology or transition, and then you again get more and more revenues and everything. Every time the large caps were the beneficiaries, biggest beneficiaries, followed by mid and small. After 2019, we have seen when COVID came, 2021-22, we have seen the mid caps were the biggest beneficiary because the deals in which they were never able to participate because they were 500 million, 1 billion, and sizes of those, these guys were not able to participate. But post-COVID, the deal sizes became very small and they were the biggest beneficiary. You saw all these stocks becoming 10x. I think after AI, I think the biggest beneficiaries will be the small caps because the size of contracts are further falling to 1 million, 2 million, $500,000 and all, which these numbers, when they stack up, it will take 4 or 5 years to make a meaningful impact to the large caps and to bring growth back to them. So my call is that, the large caps will see 4-5% growth for elongated period of time, maybe 3 to 4 years. The mid cap will see 10, 12%, 15% growth for 3-4 years, and they are at 6-7 times PEG ratios. The small caps, which are not very expensive on the PEG ratio, they can actually see a much higher growth. That is the way I see the industry shaping up. In my view, I am very clear that, outsourcing, there is no option. You have to outsource to India only because even if you see the software engineer cost in any other geography in the world, it is today higher than what the price that we are charging. So it is not replaceable. So work will happen from India for sure. The mode of execution will change. As I said, the numbers will further come down. In last 10 years, numbers have come down drastically on the H1Bs. They will further come down. And many people will not send to US. They will start sending some people nearshore to Canada, Mexico. I think Canada will be the biggest beneficiary of this in that sense. And rest of the things will get offshore. in revenue growth can come down a little bit because the billing rate of onshore is higher than offshore, but margins will go up because there was no margins any which was on the onsite. It was always the offsite which was making margins. So margins will go up on a lower revenue base. So you will see margin improvement and you will see lower revenue growth for some time. But because the large caps cannot do much, I think the interest in the industry will go down from the investor, both for FIs and domestic.
Bhavan wanted to understand the impact, particularly on small and mid caps. As Sandeep was saying, that so far they were seeing higher growth and therefore more interest, mid cap and small cap IT companies. But now with soaring H1B costs, they're practically priced out. And if they're not able to send employees on H1B visa because the cost is so prohibitive, will this hurt their ability to win and retain deals? What is your opinion on this?
I mean, I think I think it will. I think it affects everyone, I think So if a small company does not have any local hires who can help them in this kind of a situation on an immediate basis, they will have to deal with significantly higher cost. But I think that the reasons why the small and mid cap companies have been growing faster, I think they've become even stronger. I think I think the comfort with offshore has increased significantly over time. And I think, that's why, if you look at a lot of GCCs, also very small size GCCs are being set up these days. So the trend that is favoring them, I don't think changes away because of this. But in the near term, depending on how well prepared they are to deal with this, that's different companies may have different impact.
Sandeep, I'll come back to you on this question about, whether it impacts the mid-cap growth if they're not able to send people to the US on account of this H1B visa. But I'll have to slip into a very short break, so request both you gentlemen to stay on with us. Hello and welcome to this special broadcast. I am Reema Tendulkar. US President Trump has imposed a $100,000 fee on H1B visas, which are used primarily by Indian workers in the tech and IT sector. The move has sent shockwaves across the industry as a significant escalation in cost effectively could make these visas economically unviable. Currently, H1B visas cost anywhere between $1,700 going up to $4,500. President Trump signed the executive order in the presence of Commerce Secretary Howard Lutnick, who put it bluntly. He said, and I quote, "Train Americans, stop bringing people to take our jobs. All big companies are on board," end of quote. Indians are overwhelming beneficiaries of the H1B visas. More than 71% of the visas were granted to Indian nationals. China ranks second, which is 12%. Amongst companies, Amazon has more than 10,000 employees on H1B visa, according to the US government data. TCS is second with 5,500 visa holders, followed by Microsoft, Meta, and Apple. This is as per data of June 2025. The American Depository Receipts, or ADR as we call it, of Infosys and Wipro tumbled in trade after Trump's proclamation. The relationship between India and US has also soured in the last few days, with Trump imposing a punitive 50% tariff on Indian goods. Earlier this week, the US government revoked the sanctions waiver on the Chabar port in Iran, which is being developed by India. Amidst all this, reports suggest India's Commerce Minister Piyush Goyal is set to visit the US next week to hold talks. Before we discuss with experts, here is President Trump and Commerce Secretary Howard Lutnick on H1B visa crackdown.
I think they're going to be very happy. Everyone's going to be happy. And we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that. And they're very happy about it.
So the whole idea is no more will these big tech companies or other big companies train foreign workers. They have to pay the government $100,000, then they have to pay the employee. So it's just not economic. If you're going to train somebody, you're going to train one of the recent graduates from one of the great universities across our land, train Americans, stop bringing in people to take our jobs. That's the policy here, $100,000 a year for H1B visas, and all of the big companies are on board.
Let's take this discussion forward and invite on the show Meera Shankar. She is the former ambassador to the US, a seasoned diplomat, and she's now joining us on the show. Thank you very much for joining in, ma'am. First it was the 50% tariff, then the sanctions waiver on Chabar port. And this latest salvo from the Trump administration. Are India-US ties worsening, to your mind?
Definitely. I don't think, that infliction of economic costs and economic pain on India is going to lead to a healthy relationship in the medium or long run, or even in the short run. Clearly, the US has decided to squeeze India economically for whatever reasons it has chosen to. And I think India has to take note of it and devise its own responses to it. For instance, US IT companies, e-commerce companies have a free run in the Indian market, including financial payment systems using the UPI platform. The platform has been developed by an Indian, but both Google as well as Amazon, they have their own payment systems. And essentially, they are getting a commission on every financial transaction in India as a result. So you don't have to, take drastic action. But surely there are limited actions which one could take to say that this is not a one-way street.
But can you tell us how India might respond? At the end of the day, diplomatically, we have to protect the interests of our IT workforce there, and even otherwise. We've so far at least not gone down the path of retaliation. Will that continue? And again, to that point, how should we respond?
Well, it depends. I think clearly, the US has far more leverage than you have. But between doing nothing and signaling that you could do something, you may not do it, but you can signal that if things are not resolved within X amount of time, then these actions will come into play from the Indian side. So it's not immediate retaliation, but it's also not just sitting back and doing nothing. So you're signaling that we are willing to discuss, we are willing to talk, but if things don't work out, this is the kind of action that we are contemplating. So I think it's something that at least the exercise should begin within government to identify where it could, take some kind of measures and signal that, not take it, but at least signal that these are the measures which could be contemplated in future if things don't get resolved.
Okay, India needs to single. Ma'am, do you think this is the lowest point in the India-US ties, at least in the last 2 decades?
Yes, I would say this is the lowest point in the last 2 decades. I think in 1971, actually, when the USS Enterprise sailed into the Bay of Bengal with a view to intimidating India, which was already bearing the burden of 10 million refugees and therefore had decided, after a lot of consideration, to help the freedom fighters of Bangladesh militarily and to move in. I think that perhaps was the lowest ebb in India-US relations. But in recent decades, ties had grown and the two countries had become strategic partners. And also, I think what is surprising is that there is no fundamental conflict of interest between the two countries. So to be singled out by the US for such action seems like, it's a kind of national peak or something to assert their power over a more manageable target.
What does it mean for Indians living in the US? Is it legitimate to fear that they perhaps would be targeted next? Could we go down that road?
Yes, I mean, those who are on visas would find that getting visa extensions probably will become more difficult. Those who have applied and are waiting for green card processing will probably find that that process may become more difficult. But the US will also be depriving itself of talent. And so, in some ways, they may be, hastening its decline as well. So this kind of protectionism, where the openness which the US economy enjoyed, and that made it innovative because they were able to get the best people from all over the world to come and work there. They had excellent universities, research institutions. Those are now under pressure. Funding has been withdrawn for research institutions. Many universities are being told to kind of toe the line politically or face a funding freeze. So the entire ecosystem, in a sense, which fueled US competitiveness and made it the strongest economy in the world, will start facing challenges because of this closing in on itself rather than opening up to talent. For India, I think, as your previous speakers were saying, Indian companies will try to find workarounds because in Trump's first term, already they had made the processing of H1B visas quite costly. The previous Obama administration had virtually made it clear that about 50% of the workers should at least be American citizens. Otherwise, higher fees would apply. And so in some sense, our companies have been trying to work around this issue. But, we don't know if it's going to stop here. We say that this will fuel offshore development or the setting up of global capability centers in India. Will those be targeted next? We really don't know because it seems to be kind of a spiraling ladder of action which the US is taking. Now, partly it's driven by their own domestic politics as well, because it's a strong anti-illegal immigration platform on which Trump got elected. It's a strong platform to promote American citizens for employment within America, to stop outshoring, to go back on globalization. So in some sense, President Trump is implementing the agenda on which he got elected, but it's selective implementation because the largest trade deficit with the US has is not with India. India's is we have a surplus of about $45 billion in goods, and the US has a surplus of a little over $100 million in services with India. But it's China, which has a surplus of almost $300 billion with the US. It's, it's not going to resolve US issues because they are really, what could I say, pussyfooting around their biggest challenge and veering between accommodation and competition. So some strands want to work out a deal with China, focus on homeland security and defense of the Americas, leave the rest of the world to its own resources. And at the same time, you'll see, that the Pentagon is also acting contrary to this. So you have both isolationism and expansionism going on at the same time.
But as you said, right, it's about leverage. And compared to the US, India seems to have less leverage, or even compared to what China perhaps has on US. We understand that Piyush Goyal is headed to the US. What should be his priority, very quickly?
Well, it's going to be trade talks, essentially, because the US sent its chief trade negotiator to India for consultations, and then said that, trade talks would resume. So presumably those consultations were constructive, but this is something which we will know once we get a feedback from what is discussed and what the tenor of discussions is in the trade talks. Of course, the US may be in violation of its H1B commitments in the GATS, the General Agreement on Trade and Services, where it had pledged 64,000, persons annually moving in.
Right.
But of course, that's why I think they've chosen to raise the fees, but not do away with the scheme.
Right. Okay. Ma'am, we'll leave the conversation here. Thank you very much for joining in. But your point is well taken that perhaps India needs to signal a firmer stance in protecting its own interests, at least signal a firmer stance. We will get into a short break on that note. We'll continue the discussion on the other side.